the CEO Confidence Index managing, as I said, to maintain that positive upward momentum, sitting now at 63.99. So we have confidence returning here. Question is, just how much caution is still out there?
Well, of course, there is lots of caution still out there. The index has come up to its previous highs, but obviously the index has come from a low base, considering it was launched in the second quarter of 2009. But there's genuine feeling that the confidence is returning and that the recovery is underway. And this is being mirrored, obviously, in the markets, where we can see the equity prices, which ran at the second half of 2010, are now being very resilient under the market conditions, where we're seeing, obviously, the ongoing debt crisis in Europe, and the tsunami which happened, obviously, in Japan, and of course the Middle East and the North Africa political disruption, which led the oil price from $95 a barrel to $117 over the first quarter.
Well, you talk about this correlation between these results that we're seeing as a leading indicator of GDP and JSE sector indices performances as well. Is this across the board that we're seeing this correlation?
Absolutely. We as the index is answered by CEOs of the top listed companies, private companies, parastatals and multinationals, let's call them the captains of industry. They have their fingers on the pulse of what exactly is going on in the local conditions, and therefore we feel it mirrors the markets quite nicely. And when we do track them against the indices, we find that there is quite a high correlation, and we attribute this to being a leading indicator.
Why this is so substantial, this set of results, is that if we drill down into the components that this survey actually evaluates, we're looking at economic conditions, and it's standing out because economic confidence level seems to be at pre-World Cup levels at this stage, and that's quite a ramp up.
Well, that is exactly the case. We had the index reaching 64 points at just before the World Cup last year, and an inevitable, I suppose you can say, fall back down to earth. And that's why we are considering it quite a considerable thing that the index is now turned again, and we are back up to those pre-World Cup levels.
It seems that there is a standout sector, though, and that being the consumer services sector. It's the only sector not to register an increase in confidence in economic conditions, and we've seen a fall in point terms from 69 to 59. That's quite a drastic drop that's come through there.
That is quite a drastic drop. When we're looking at these sectors, we must obviously look at what they comprise. Now, the consumer services sector is comprising our retail companies as well as our travel and tourism companies. On the retail side, obviously, the consumer is still feeling the pinch a bit. Fuel and electricity increases are still coming through, and therefore the disposable income is not necessarily expected to be there over the next 6 months. And on the travel and tourism side, we're still seeing an oversupply of accommodation, which is also a result of the World Cup.
Yeah. Taking a look at the extent, or to the extent at which consumers have been shielded from the strong rand, for example, it now seems that the sense is that cushion is going to start deflate as retailers start to transfer prices to consumers more aggressively, and that could weigh on their operations as margins get squeezed or sales get squeezed.
Sure, there's that to it as well, but the rand won't necessarily be depreciating against the dollar. We obviously expected that it might depreciate against the euro going forward. But that is expected, that it'll tighten margins for sure, yes.
And it is a double-edged sword as well, this stronger rand that we're looking at, because what it's done is, it seems, force retailers to focus on local manufacturers and local producers specifically, and boding well for confidence levels within those respective territories.
Absolutely, you're 100% correct there.
Okay, well, defensives, let's take a look there, because food retailers looking to be the most defensive, looking at some of the strategies we've seen, the likes of Pick n Pay, Shoprite, Spar come through with, it seems that there's quite a big focus on investment and ability to actually raise capital moving forward. Does that translate for retailers in that regard?
Well, we're finding, obviously, with the GDP slowly creeping up forecast, that the investment is coming through. But in terms of the index, our investment was fairly flat, going from 61 to 62, if I'm corrected. But on the retail side, as you're saying, the defensive stocks, such as the Spars of this world, they have that cushion that food, being a defensive product, will always be purchased by the consumers. That's why we're seeing that difference between the traditional retailers and the defensive retailers.